I'm Jim Juback, and welcome to my YouTube video for Juback Asset Management on Friday, March 10th. It's a beautiful day here in Venice, and we've got another 2 weeks in the city before we go back, before we leave for a little bit visit back to New York. My daughter's graduating from Boston University, and the daughter of a good friend, and is getting married. Call out Nora, James, hi. Congratulations. And after that, we'll spend another week in New York or so saying hi to friends and doing some medical stuff. And then when we move back to Italy, we'll be moving not back to Venice, but to Sicily, where we've rented a house on the slopes of Mount Etna, because it's always been part of my bucket list to check off, live on the slopes of an active volcano. So maybe I can get some good video of spewing. I don't think there's any lava right now, but there is certainly a lot of smoke. Anyway, so if you like this video, please give it a thumbs up and subscribe to my YouTube channel. That way you get notification when we do our next one. We're doing about 3 a week, but not always on the same day. If you subscribe, that's free. You get notification when the next one goes up. For more free stuff, you can get my free site. That's jubackpicks.com, which has 3 portfolios for 12 to 18 months, 5 years, and then some dividend portfolios, plus usually 1 or 2 posts a day. Or you can subscribe to Juback Asset Management, jam.com. And that's got 6 portfolios. Besides those 3, also a portfolio for ETFs and a portfolio for volatility, which has sometimes, we do some options. And then a really long term, beyond 5 years, for people who have got a long time horizon and therefore can use time to their benefit. So you'll find all those down below, links to all those down below. We'd love to have you as a reader, subscriber, free, paid, whatever works with you and whatever you find valuable. Also, we've started a free Substack. As I said, we moved to Italy, long-term goal of my wife and I. And we moved here in September 2023, here for probably about 3, 4, 5 years, something like that. Anyway, we started a Substack, which is also free. It's called We Moved to Italy. You can find a link to that down below too. Anyway, as I said, today's topic, how big a danger is consumer debt? Now, the Fed is trying to get inflation down that last percent, depending on what measure you use. We're at 3.8, 3.3, 2.8, whatever. We're not at the 2% target. So the question for the Fed is, how do you get down there, which means you have to slow the economy without crashing the economy? You don't want to produce a recession, because that would then make you put more, you'd have to cut rates again. You go back into the whole scheme without ever having gotten inflation really down to the target. So one of the things that the Fed is trying to figure out is, well, what shape is the consumer in? Because the consumer economy is about 70% of the economy. And it's really important how much consumer buying there is, how much consumer spending power is left. And one of the things they're watching very carefully is debt. Now, there are 2 problems looming here. One is that debt, as we can measure it, it looks like it's at a high level. So we're talking about in December 2023, credit card delinquencies were up to about 3.5%, which doesn't sound like a whole lot, but it's also the highest rate in this measure, which has only been tracked since 2012. So we're talking about 3.5% delinquencies, which means you're past 30 days outstanding, and being at a historic high. Okay, that's one problem. That's a measurable quantity, so the Fed is watching that very carefully. The Fed has also started to, as well as people outside the Fed, have started to say, hey, there's another problem with consumer debt, which is that part of it isn't measurable. There's this thing called buy now, pay later, which has been termed by some people phantom debt. Basically, what you do is you stretch out your payments so that you say you buy a suit to go to a graduation, perhaps, and instead of paying all at once or paying stretched out over time, maybe never, as credit card debt tends to be, you guarantee that you're going to pay in 4 installments. Now, the problem with this is that these companies, there are now a lot of these companies. It's an increasing percentage, it's an increasing amount of debt projected to be, it's only about 18 billion now, but it's projected to hit 700 billion by 2029. And it's clear people are having trouble with this, but it's unclear how well we're tracking it. That's because these buy now, pay later companies don't report their results, their credit scores, their delinquencies, anything else to the big three credit bureaus like Equifax and all that. So it doesn't really, the numbers really don't fall and get counted very well. So it looks like anecdotally that delinquencies here are really, really high. Anecdotally, so Bloomberg did a survey and it broke it down a number of different ways. The survey said is that about 43% of people with buy now, pay later loans saying they're behind or feeling pressure on payments. 28% say they were delinquent on other debt because of buy now, pay later payments. Buy now, pay later is not very forgiving. It gives you, it breaks up your payments into 4 lumps, but if you don't make the payments that you've guaranteed them, they really slap on very heavy fees and you can wind up with a big bill. So that was 2 results. But the Bloomberg survey also showed is that the real problems are, as you would imagine, in the bottom half, let's say, or bottom whatever, bottom tier of consumers. This is households with below $100,000 in income. 42% they were saying that they were behind on their buy now, pay later debt. So this is not tracked. It's not in the Fed numbers. It's not in the delinquency reports from the Fed. But it is clearly a growing problem, and it does seem to indicate that consumers are feeling a little tapped out. Everything we can tell says that people had money coming out of COVID because of COVID payments, and that sort of backlog is pretty much dissipated. Wages have been rising, but it looks like spending has been going up faster, and it does look like we're getting higher delinquencies and buy now, pay later, not in that sum, but delinquencies there probably even more. All that suggests that the economy looks like it's slowing, maybe faster than the Fed wants. And that's the crucial thing. It is slowing. The Fed knows it's slowing. That's the whole point of the exercise. But you don't want to slow it too fast. And if you can't track the numbers, the odds are that you're going to wind up making a mistake because you simply don't know what the facts are. So this is something very, very important to watch going forward. We get regular reports from the Fed on what consumer credit looks like. We've got another one coming up very soon. So watch this carefully. It's a big deal for the stock market because consumer spending is so much a part of company revenue, as well as earnings. Revenue and earnings are really the only supports for the market if we're looking at a situation where the Fed is not going to lower rates until maybe September, November, December, longer at this level than expected. So don't get a big boost from lower rates for the stock market. Okay, so watch consumer debt as well as you can. Everybody else is. So thanks for watching. If you enjoyed this video or found it useful, please subscribe to my YouTube channel. That way you get notification when we do our next one. We're trying to do about 3 a week, but not always on the same day. If you subscribe for free, you get little email notifications of when we do next one. You can also subscribe. You can also sign up for my free site. That's jubakpicks.com. 3 portfolios, 12 to 18 months, 5 years, dividends, free, 1 or 2 posts a day. You can subscribe to my Jubak AM site that has 6 portfolios. Those 3 plus a ETF portfolio, a volatility portfolios that sometimes does some options, and then an even longer term than 5 years for people who have a lot of time to play with. They can use time to their benefit. Okay, I also said we moved to Italy, so we started a Substack, which is free, called We Moved to Italy. Sign up, follow us as we go along. Next one that I'm going to write today, I think, is about a recipe for Risi ABC, which is the dish of the Doges from 925 AD and on. Okay, thanks for watching, and you can find links to all those down below.